Hello traders, welcome to the LFB and our global video charting review for Tuesday the 17th of May 2011. I'm Marco Haig from the LFB Trade Desk. This is the review of equity and exchange traded funds. We do ask that you pause the video and just read through the disclaimer before proceeding. Newswires are quiet in regard to equity indices valuations, but earnings season could easily ignite another big move. Trade desk updates have called for consolidation at support above 1320 on the S&P 500, above 7250 on the German DAX, and above 9500 on the Japanese Nikkei. If these areas are broken at the close of business this week, global equity sentiment will turn bearish, and any news wire headline then that has a negative stance in regard to equity valuations could draw in the big volume that we've been missing on the move higher. Global markets are at support at the moment. Risk markets, equities, and also commodities are at a major swing point level, with the US dollar going the opposite direction. Dollars getting bought as these equity and commodity markets are absorbing some selling. Unless some big volume comes in, the path of least resistance could be short on each of those asset classes, and the dollar to be able then to move higher. I'm going to take a look at the S&P and the Spiders, the exchange traded fund that tracks S&P 500 momentum for those traders that work the 9 to 5 session. The technical review does look at near-term charts. They're 1 hour charts. They are proprietary, and we ask that you respect that. The video reviews that we've looked at show the dollar index in the currency video that looks very similar to this S&P 500, just inverted. We've got a very strong trend line going lower on the S&P, but just like the dollar index, however strong the downwards trend is, each of the breaks are being completely reversed on an intraday basis. So what happens in the futures market ahead of Wall Street trade is then getting a big reversal of that movement. In other words, very difficult for something to break, hold, consolidate, and break again. You're getting big reversals, which means you need much bigger stops. But the problem is you don't know where your target areas are in a market that is reliant upon news headlines to generate momentum. We are looking at a market that's incredibly light on volume on the way up, but a market that is attracting larger volume on the way down. Intraday trading ranges are high from the low to the high each day. They're increasing, which tells us that speculative interest is strongly in the market on any given day and far outweighing the institutional volume that speculators are there to balance. So all in all, path of least resistance does seem to be short on S&P 500 futures contract trade. Be very careful with any open positions in equities at this point in time, because breaking news headlines are impacting this S&P 500 market more than anything else. This is the exchange traded fund that tracks the S&P 500. This is the Spiders, SPY, and this is about as ugly a set of charts as you can see. The main difference between what we saw in a futures contract that had a trend in market going lower compared to this, which is sideways chop that looks like dripping candlesticks, is the fact that the exchange traded fund, SPY, doesn't pick up any of the aftermarket when the Wall Street session is closed. So the 18 hours of any given day, or the 16 hours that there is no exchange traded fund momentum, is just negated from this chart. So whatever the global market does with S&P futures contract valuations, you're not seeing it until 9:30 the next morning, or if you do trade early, 8 o'clock in the pre-market through till 8 o'clock at night in the afternoon market. But that's a very volatile period of trade to be in. So compared to the S&P 500, this SPY chart is sitting at the 50-day simple moving average, having had a period of sideways consolidation. If you'd have been in the S&P 500 futures contract, you'd have had a roller coaster ride lower. If you've been in the same period of time in the SPY, you've had a roller coaster of a ride sideways. We do need more volume. Absolutely no doubt about that. We do need more volume if these technical patterns are going to easily follow through. If you are just a technical trader, you're getting whipsawed a little bit now because of the fact that volume is so light across the global market. At this point in time, it's hard to see where upside volume is coming into the market. We're coming towards the end of earnings season. We're going through a period of trade that historically will be either a coin flick long or a coin flick short. We've got nothing clear cut about what we're seeing in equity trade at this point in time. If global equity buyers do step in and if we do get strong volume, upside targets on SPY are 136. There isn't really too much in the way of a sustainable move up towards 136 on SPY, but the same as the message in the commodity and the currency reviews, now may be a time just to sit on your hands and wait for some stronger confirmation that these markets have found a direction rather than having found fair value. That wraps up our review of the equity and ETF market for Tuesday. We'll be back with you tomorrow. If you do need information about memberships, go to the LFB website, services. Under the services menu is the subscriptions. We've also launched a new training online live course, which is global market momentum trading, and that's going to be delivered on the last weekend of May and the first weekend of June. You can take your pick, Saturday or Sunday in either weekend. And detail of that is on the LFB website under the training menu.